Oh my goodness, it's been quite the trip here. Well, so I'm in Dubai right now, but in the last 2 weeks I went from Istanbul to Tampa, Florida, where I gave a speech at a medical conference of all things, and then I've flown now to Dubai. So all in a week, it was Istanbul, Tampa, Dubai. That is tiring. But now I'm all revved up and ready to go. Let's go, 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 make some money here. All right. And of course, this is the key. All right. Now, I told you last week that the market was, the underpinnings were shaky. And in fact, the market is now coming down. I think we have a little bit more to go. Probably down to 3,300 would be my best guess. 3,300 to 3,320 for sure. So that would be a couple of more down days. I don't think we're going to get lower than that. They'll use the coronavirus as the excuse, but we're just looking for a little dip in the market, not a big deal. Selling pressure did increase. You can see it's a higher. That's the little red line there is higher than the green line, showing that selling pressure is more than buying pressure. But of course, the market was under pressure, so that falls into the category of duh. Now, NASDAQ, same deal. No, okay. All right. Seasonality, still on a buy signal. Still on a buy signal. And we're actually a long way away from our sell signal, which is the dark line there at 157. Now, the thing is, though, this is a chart of the Russell 2000. It didn't make a new all-time high the way all the other indexes did. In other words, it's been weaker. Small caps have been weaker. And that's one of the reasons why I haven't been super excited about the market the last week. This is one of those divergences that makes me a bit nervous. Now, seasonality, we're in a site where really we should be sideways. We should focus on the green line, but that's just really sideways until June. So I'm not looking for a lot of profitability here over the near term. Yield curve is going more and more into negative territory. So once again, this is bad. This is going to be. I'm sure we're going to have a recession. I'm sure we're going to have a bear market. It's not starting now, but maybe in the fall. The point is, let's just be patient. We don't have to worry about it tomorrow. Asset allocation. They moved out. There's been a flight to quality. They're going to say it's coronavirus related. Probably is. They're worried about the global economy because of the weakness in China and related countries such as Japan. South Korea is being kind of number two, Singapore. These are pretty significant countries that are being affected by the coronavirus that have a lot of cases. I shouldn't say a lot, they have very few actually. If you're talking about 80 people out of millions, that's not a lot, but you know what I'm saying. Riskicator, they're not, although they moved into bonds, inside the stock market, they stuck with the kind of risk that they wanted. So we're not seeing a big rotation inside the stock market, but we did see, as I say, a rotation into bonds. Global shares weaker than the US big cap indexes. Okay, bonds rocketed higher. So last week I talked about this pennant formation and I said it was legitimate pennant formation and I told you how to play it and it exploded to the upside and on heavy volume. So it was a perfect perfect textbook example of a pennant formation. Okay, we've now reached the objective of that pennant formation, but so we may see a little bit of a setback here, but people are running to the exits. They're looking for some type of a safe haven. It's not a stampede yet, but they are looking at it. So I'm looking for bonds to continue to do well. Our indicators, though, showed a little bit of stability, still suggesting maybe lower interest rates, but they are showing some stability. So we reached the objective technically on the pennant formation, and now I think we can look for it to continue higher, but just in a very sluggish manner. Dollar took a dive on Friday, but you can see it's been in a significant bull market. since the beginning of the year. So call this a retracement, not a trend change. Gold, another, I talked about this one as well. The pennant formation worked beautifully. We've now reached the objective of gold, of the pennant formation as well. So at this point, I'd say we're still going to see a bull market in gold, but it's going to now, instead of being explosive, it's going to be sluggish, but still a bull market. Our gold key indicators, the top one hooked up, but still kind of a bear move. We're not making higher highs or higher lows yet. CRB is a little bit more bullish, and our final indicator down at the bottom had been turned very, very bearish. Nonetheless, gold is moving higher. Of course, fully paid up members know why, because we reveal different indicators and the super cool indicators for fully paid up members. So if you're not a fully paid up member, come on, get with the program. All right, crude oil did exactly what I said it would do. We're not going to see much of more of a rally here, though. So look for crude oil to stabilize here, maybe even drift a little bit lower. I think we might, like drift a little lower for the next few days this week, then start to rally up and get back up above the highs we made on Thursday. So it's going to be sloppy choppy. Bitcoin kind of fell off. Like I say, I didn't get long the way I normally would because I just didn't feel this was sustainable. The purple predictor starting to fade a bit, still a little bit bullish. So if you put a gun to my head, I'd say bullish, but I don't have a position, so who cares? All right, freebies. Love having you here. Fully paid up members, though, hang on for just a minute, and I've got so much to cover today.